As Tokyo market closed for the week, the Nikkei ended lower and the yen weakened back toward 155. But this is not the result about panic. It is a story of profit taking versus risk of management. So let's break it down sector by sector. Starts with market overview. The Nikkei opened at the week at 57,200 and climbed to the range of 57,700. It was the maximum high for this week. Then it dropped to 56,100. And finally, on Friday, it closed around 56,700. Especially on Friday alone, it saw a decline of 1.21%. Despite this swing, this index remains inside its broader range. So what does this mean to investors? This is so-called cooling momentum. So it is not a weakness or a structural weak. Starting from this week, we are going to see sector-wise performance. Let's start with semiconductors. Heavy profit taking after massive early February rallies. Yes, what was the reason for this rally? Do you remember? Yes, it was Japan's snap election result. And also concerns surfaced about whether AI valuation are becoming stretched. Then let's see AI and IT services. There was a significant drop in this sector as well, followed by global tech weakness, especially from US software stocks. Then we move on to automobiles. Automobile sectors dragged lower by risk of sentiment, and there is still pressure on Toyota's outlook. Coming to financial and banking, it was led Friday's decline as global private equity jitters spread into Japanese brokerages. The last and final one is pharmaceutical. Especially pharmaceutical sector, it was highly volatile, driven by regulatory headlines and aggressive profit taking. So let's go more deep dive into with the stocks. Yes, starting with semiconductors, Advantest fell 2% on Friday and saw strong volatility. The next, Tokyo Electron declined 1.5%. LaserTech remained active, but sellers dominated late in the week. In automobile, Toyota Motors dropped 3.68% on Friday alone. Coming to financial, SBI Holding fell around 4%. It is the sharpest decline in this month. And the next one, Nomura, sank 3.7% as security stocks led the downside. And let's see the biggest shock of the week. Yes, Sumitomo Pharma plunged nearly 16% in one session. It is because of largely due to intense profit taking after its recent rally. So this is all about stock market for this week. So let's move on to the next category, yen. Meanwhile, USD versus JPY moved from around 153.5, which was early in this week, to approximately 155.4 by Friday end. So what does this mean? The yen weakened again. This driven by shifting expectations around Federal Reserve's rate cut, slight cooling in Japanese inflation data. Especially for foreigners living in Japan, currency remains one of the most important drivers. Yes, isn't it? Why? Because for the remittance conversion impact to our local currency. Then let's see next week as outlook. First of all, on Monday, market are closed for Emperor's birthday. So trading resumes from Tuesday. Then let's see two key areas to watch. Energy and trading houses. Yes, this is going to be a very important topic next week. Why? Because of rising US-Iran tensions. So oil related names such as Mitsubishi and most trading houses could see movement. The next one is Tokyo CPI will release on Thursday. You are still confused? What is Tokyo CPI? It is a monthly inflation report that shows how price of goods and services are changing in Tokyo. In simple, it is a inflation data. So in this week, the biggest driver for the yen would be Tokyo CPI data, and the direction and the banking sector performance will be affected directly. So if inflation surprises to the upside, banks could rally and expectation of tighter Bank of Japan policy. So if you are a foreigner living in Japan, here is what you should make note of this week. First, the yen moving back towards 155. This means we must be cautious in remittance while transfer money to our home country. Second, volatility in tech and financial stocks shows that Japanese market are also sensitive to global sentiment. So if you are investing in Japanese equities, be prepared for sharp short-term swings. Next week we have a Tokyo CPI data could directly impact the yen and banking stocks. Inflation surprises often move currency faster than stock. So don't watch the prices alone. Watch the reason behind it, especially currency, inflation data, and sector rotation together. So this combination matters more than any single headline. So to summarize this week, Nikkei, volatile but range bound, tech and financial sectors led declines. How about yen? Yes, weakened toward 155. So overall market tone, it was a profit taking, not a panic. So once again, I am insisting next week's CPI data may determine whether the yen strengthens or continue to weaken. So I will see you next week for the next Japan weekly market update. So if you want to simple explanation of yen, Nikkei and Japanese economy every week, stay tuned. I will break it down clearly so anyone can understand and made simple made invest sim